So welcome back to MainStation. This is going to be a market update. No trades today. It's now Saturday, the 22nd of December, and it's been a very interesting week, especially in stocks and the index spectrum of things. So we have the S&P 500 right here, SPY, and we've been seeing this channel since 2008 for a decade now. You see it breaking below right here, hitting support here and finding support here, and basically it now broke below this line. So this is just a trend line, so it's not too important. Trend lines are often drawn very subjectively, so you have to always be a little bit more reflective and not too one-sided in your thinking when it comes to trend lines. But nonetheless, we've been seeing an intense drop in value, in price. I meant to say, of the S&P 500 in the last week. You can see right here about 7%. And if you compare this to 2008 in 1 week, so not including this here, because I mostly would say that this top right here, this upward channel, this bear flag, would more coincide with this. You can see right here, if you draw trend lines like that maybe, and like this, and now we've seen a drop below, or in 2018 or this is in 2007, we've seen a drop below it right here. And if you go there and measure this price movement downwards, it's been also 7 to 8%. So in this aspect, it's very similar. I would not compare this movement yet to the flash crash we've seen in a couple of weeks, where price moved in 1 week about 20%. So this obviously hasn't happened yet, but since we've now broken this channel, which looked similar to this we had in 2007, I think we could very well see it now come back to the 200-week moving average, which is represented in this purple line right here. And we've almost seen a touch of it. So what I think could happen is that we touch it, see a retrace or a little bit of consolidation, a retrace to this channel right here, just like we've seen in 2008, where we had a drop below, a little bit of consolidation, and move back to the channel line, and then the very drastic drop in price. So yeah, if we compare this to 2008, obviously the circumstances are not the same, the fundamental circumstances, yet we are still kind of in a crisis, looking at global debt. So also the trade war happening in the USA with China does not seem to help the global economy in any aspect. And I would very much advise you to go to the channel hyperwave. There, Leo Wald and Tyler Jenkins have been talking about the global market situation in different indices, in different index areas. For example, like China, India, Russia, and so on, Germany, and all have been moving down. If you go to Germany real quick, you can see the DAX has now been also breaking below the support line, the support trend line we had since 2013, and it's not a very drastic drop yet, and we already seen a wicks through, so we could very well see a retrace. But if we break drastically lower and see an undoubtful drop below it, then we would look at levels around right here, which have been resistance and then broken in 2013. So they would also coincide with this long trend line we've seen since 1982, and it would be very possible for the DAX to reach this level and maybe not drop drastically, maybe not drop below it. Find, if we go to drawings tools, like drop below, consolidate, retrace, consolidate again, or come back down, consolidate again, and then see a drop right through to here, go back up, create a higher low, and move back to the upside. And I don't know how big the bear market is going to be, but I will definitely call for one in the near and midterm future, and maybe we'll see something happen in 2020. But in my opinion, and in many others' opinion, I think a bear market in 2019 is very much possible, and actually the most likely scenario, concluding all the data I've been privy to. Yeah. So this is the DAX. If you go to the Dow Jones, you see very, very similar things like the S&P 500 hitting the trend line right here. Not yet touching the 200-week moving average. So very much possible to go back down there. So I'm now looking at this trend line right here, and the next would be this trend line. If you go to the monthly, you see where the trend lines are coming from. This is from 1931, the drop, the crash we've had, and no, come on. And this is the channel we've been seeing since 2008, and I'll be looking at this. You can almost ignore this channel line. Actually, it doesn't make it more clear, in my opinion. So yeah, if you go to the weekly again, you'll see we now drop below the 100-week moving average, and if we look at the daily, we see we are below every moving average and now hitting this trend line. Actually finding very immense volume. That's interesting. Now on the last trading day, and we closed on the bottom of the candle. If we go to the 1 hour, no, it doesn't make it clear. 4 hour, no. Yeah, it's just not clear. So the daily, if you so you can see the volume spike we had right here, which could either signal a bottom or could be the actual beginning of our bear market in US equities. And in this aspect, in the Dow Jones Industrial Average, we also seen like the biggest volume candle right here on the second or on the first top of this bear flag we had on the top. Yeah. So that's the Dow Jones, and if you go to the Russell Index ETF, yeah, you can see very similar things on all indices and averages and so forth. And in this aspect, the ETF, we are now reaching critical support created in 2015, and also this trend line which we had since 2008 or 2009 actually. Yeah. If we go to the moving average, if you look at it, then you see we drop below the 200 week, which is a very bearish signal. If you go to the monthly, you'll see we are soon reaching the 100 month, and since the 200 month just started to exist since 2017, I would not include as very important data in the Russell ETF, in my opinion. So I would more look at it on the weekly. And we've seen crashes below it, or drops below the 200 week moving average. So it depends if we find if we retrace or not. In general, I think in the next week, maybe after Christmas, a retrace to our moving average lines and trend lines and so forth are very much possible. And if we see a retrace and a wick to them, if we see consolidation after it, then I think there's much possibility for further downside. And looking at gold, I just wanted to quickly include this. I've been looking at this for a couple of months now. So we had this trend line, this long trend line, since 2017, 2007, I meant to say, and the bull market, or actually it's always been a bull market in gold, at least including the data on TradingView. Yeah, so we had like this, or we still have this symmetric triangle, right? That's how it's called, the symmetric triangle. And I mean, in my opinion, it's been the touches on trend and channel lines have been very, very nice, and they got respected very nicely by the price. Since you can see here, and now a retrace to the top of this trend line on the bottom, and the channel line on the top has been also respected very nicely. Here, in this area, this here and here, and back again here. So we actually have seen a bull break of this symmetric triangle, but seen then lower lows since the bull break, and now we are like between both of these channels, or trend lines I meant to say, and creating now this channel to the upside, which it has been, it's at least for me, it's very interesting, because like we broke out of it, now we're in between. Maybe we see it coming back down and maybe then move between them again. I haven't seen, I've seen this a couple of times on Bitcoin. Maybe it's just coincidence that it's like in commodities, but I just think it's very interesting, and I'm going to look at this in the future. So yeah, that's gold and the global market situation, in my opinion. Just the latest real quick. Hope you have a peaceful Christmas, and yeah, stay healthy, share some love with your family and friends, and just have a good time. See you next time on MainStation. So bye.